Recently, Janet Yellen gave a speech on the actual well-being of the U.S. economy, jobs, and future recovery forecast. She had offered her view on the slow recovery as a positive sign, even though the housing market, as we see it, has been a disappointment. To reemphasize, Yellen also noted that the housing activity has been disappointing, as I just said, with the sector showing about little progress of late, with readings this year that were extremely bad, disappointing, as mortgage rates have edged higher. She also says that her personal assessment is that the QE has been made a meaningful contribution to the economic growth. I'm not so sure about this, but the lower interest rates have been instrumental for this matter because of the housing sector. We have to bear in mind that she had confirmed and still confirms that the Fed will continue to help the U.S. economy, even though we all know that the full recovery is still yet long overdue. She said and announced that they are still trying to reach the goal of 2% inflation in order to keep the economy yet healthy. This will improve the employment rate. We all understand this. But the goal is not just for the health of the economy, but to having this 2% inflation to become preventive of any possible deflation that can harm the economy on the long run. The markets fluctuated as she had spoken in the Senate, which made us go into the negative territory as she had hinted bad news and into a positive territory when there is obviously good news. The market always reacts to this. Yellen's testimony comes as the Fed looks to end finally its monthly bond buying program, currently at $35 billion, and it's contemplating when to begin raising short-term interest rates from something that is near zero levels. 3 rounds of Fed bond buying have helped propel the S&P 500 higher by more than 190% during the current 5-year bull market. The Gauge has rallied 6.6% this year amid signs that the U.S. economy is recovering from a 2.9% contraction in the first quarter. Now, she also had commented about the quantitative easing, saying that it can't continue forever. And I agree on this, because it has to end someday due to the potential risk and cost that the economy will have side effects about this. The longer this program continues, the more we will need to worry about these risks of losing our financial stability. Janet Yellen and the stocks took a dip as soon as she did say on the valuation of the stocks. Well, she commented, the Standard & Poor's 500 index fell 0.4% at 11:57 a.m. in New York. The Russell 2000 index of small companies sank about 1.3% after the Fed report said valuations of some biotechnology and social media stocks may have been overvalued.